Goodbye September and hello October. New month, new you, right? You're finally gonna be that disciplined trader you always knew you could be. Well, anyway, we're about to kick off the first full trading week in the month of October, and I'm very excited because we have a lot to unpack. In this video, we're going to be breaking down all the major storylines and narratives you should be paying attention to as it relates to the overall market. I'm going to let you know all the stats, facts, and figures for the upcoming week and a little bit of the overall month. And of course, I'll be diving into my own positions, what I opened, what I closed, and give you my general thought on things. At the start of every week, we do this overall market breakdown video, which means I need your help. In a comment below, let me know what tickers and companies you're paying attention to so I know what update videos to make throughout the week. And of course, while you're down there, don't forget to like, subscribe, share this video with a friend, and all that good stuff. But with that being said, let's roll the tape. When the market wrapped up the week and officially closed on Friday, swing traders were feeling pretty good and day traders were not. S&P 500 post winning week, but Friday rally fizzles. So if you're a swing trader, you're feeling phenomenal. Higher highs, higher lows, S&P 500 notching a new all-time high, strong momentum, and really strong options structure. Same thing in the Nasdaq. Higher highs, higher lows, new all-time high on Friday. Pretty much the same situation. Even the Russell, the small cap sector, able to hit a new all-time high. So as a swing trader, as a generic investor, a generic perma-bull, you are feeling amazing because your accounts are at new all-time highs. However, if you're a day trader, a scalp trader, you probably didn't enjoy Friday that much because there was quite a bit of whipsaw. The first half of the day was very bullish, and then we dumped into close, and then everyone was wondering, oh, is this a relief bounce? And then nope, got a little bit of a miniature rug. So even though we hit these new record highs, the intraday trading session was pretty difficult. And it wasn't just because of price action. Even look at options flow here. It didn't know what to do until about 12:30, and then the delta, people started selling calls, buying puts, the delta dumped. Same thing in the Mag 7, the combination of Apple, Amazon, Google, Meta, Microsoft, Nvidia, and Tesla. Basically the guys who kind of lead the S&P 500 and the Nasdaq, pretty much flat until same thing about lunch. And then we dumped for about 2 hours and then a little bit of a relief bounce. If you've been paying attention to the live show, shameless plug, Monday to Friday, 9 to 11, you can watch me trade my own account. Or if you've been paying attention to the update videos, you know last week on Monday, you know that I created a bullish position on a couple equities and the overall market. And unfortunately, I have to report to you, unfortunately, this drop on Friday did knock me out of my position. So I just want to be honest and transparent and forthcoming with all of you of my successes and my failures. And this one was a win, but I'm still a little bit bummed that my trailing stop did get hit. So to give you a quick review of the position, I got into 35 SPY calls expiring on October 10th, and the strike was 666, the devil's number. You could see between these two fills, it cost me about $15,000. And as I alluded to, I got knocked out of my position on Friday, and I was able to lock in about $27.5 thousand, which means my net profit was about $12.5 thousand. So that was a return of roughly 83%. So opened on Monday, closed on Friday. It was a 1 week position, not too bad to make about 12.5K roughly in only 5 trading days. As you're about to find out, I'm expecting a lot of movement, volatility, and a little bit of chaos this upcoming week, which means that there should be a plentiful amount of trading opportunity, which brings me to the partner of today's show. Big shout out to public.com for sponsoring this portion of the video. You've probably heard me say it before, and you're most likely going to hear me say it again, but if you're trading options and not using public.com, you're probably leaving money on the table. Public is one of the most cost-effective platforms out there. No commissions, no per contract fees, plus they pay you a rebate on every stock and ETF options trade. That's right, you earn between 6 and 18 cents per stock and ETF contract with higher rebates as you trade more. If you ask me, that's all great, but now the platform is even better. You could build a multi-asset portfolio with stocks, options, crypto, and bonds all in one place. You could take advantage of their tools, including a real-time options hub, a customizable chain, smart strategy builder, and even a queue so you can prep multiple trades and fire them off when they're ready. And for my systematic traders, Public's free trading API gives you full read-write access so you can automate your edge without paying a cent in commissions. If that sounds good to you, check them out at public.com/Matt Kohrs or hit the link in the description and you'll quickly learn why Public is my favorite. And of course, thanks again to Public for sponsoring the Goonie community. Once again, shout out to Public. Absolutely love trading with them. So as I alluded to, I'm expecting quite a bit of movement in the upcoming week, and that's because the overall narrative driving the economy, monetary policy, and really the stock market right now relates to the government shutdown. According to Kohrs, the odds of how long this shutdown is going to last just keeps rocketing. Right now, we're just below 21 days, and it's not just Kohrs. Looking at Polymarket, the odds are over October 15th, as in the shutdown lasts past that date, has now shot up to over 68%. So both of these event-based betting markets are very much in agreement that apparently the developments over this weekend, and I could give you the TLDR, our politicians are basically toddlers, don't want to do their jobs, and it looks like instead of trying to resolve it, they're just going to be taking a break. Shutdown drags on as senators leaving Washington amid impasse. So I guess the reasoning is, hey,
why should we solve this gigantic issue of the government being shut down? Let's just take a little bit of a break. We deserve it anyway.
Just to give you guys a quick recap, this isn't necessarily bullish or bearish. It's very dependent on how long the shutdown lasts. The longer it lasts, most likely there's going to be a bigger impact on the GDP. The shorter it is, in fact, when you remove it quickly, that's removing an uncertainty and the market tends to really like it. But with that in mind, don't forget that there are serious implications. This upcoming trading week, we have some potential important data drops, but we're not sure if we're going to get it. On Wednesday, we have the normal 10-year note auction, FOMC meeting minutes. Jerome Powell, the chairman of the Fed, is going to be speaking on Thursday, also the 30-year bond auction. And then on Friday, as of now, giant asterisks here. Maybe we get the non-farm payrolls. Maybe we get the unemployment rate. We were supposed to get it this past Friday, but once again, because the government shut down, the BLS is not doing its work. It's not collecting any data, and it's not giving us those numbers, which is causing a lot of uncertainty. And it's causing a lot of people to realize, should our money be in the dollar, the US dollar, that is? And right now, the answer is, in the short term, no. Bitcoin rallies to within 1% of the all-time high, gaining safe haven status during the shutdown. As I'm filming this today, Bitcoin, dingity ding ding ding, winner chicken dinner, did hit a new all-time high just above $125,000. And it's not the only one. Digital gold here hit a new all-time high. So did gold, like actual gold. And we're seeing this in other commodities as well, such as silver. And as all of these things are skyrocketing, there is one thing that's absolutely plummeting, and that is the US dollar. On the screen right now is Dixie, DXY. This is the US dollar compared to a basket of other currencies. And you can see pretty much all year just down and down and down, which is saying people don't want to be putting their worth, as in their overall asset value, in something that is going down, the dollar. They're choosing to store it elsewhere, hence that article title, The Safe Haven. They're trying to store their value in a different underlying. This is pretty common when people don't have trust in the dollar and there's a lot of uncertainty related to the government and the shutdown. You can understand that it's just a little bit more of a chaotic environment. But let me remind you, it's actually a little bit more messed up than you might be appreciating. Remember, we're in the middle of a big change as it relates to monetary policy. On October 29th, we're supposed to have another Fed meeting, and we're going to have it, except they're now tasked with the idea of giving us a rate cut, potentially giving us a rate cut, without having any of the recent job numbers or inflation numbers. As of right now, on October 29th, there is a 96% chance of a 25 bips rate cut. But remember that we're in the situation where we're kind of just shrugging our shoulders, because are they supposed to do it without any of the recent data? Obviously, that's another thing that's just making a lot more questions than there are answers. So as it relates to record highs, the craziness of the government shutdown, a lot of the unknowns related to data and thus monetary policy, I do want to remind you that those are very specific to this year, but please understand that right now, the start of October to pretty much halfway through January, seasonally, this is a very bullish period. So obviously, seasonality is not the end-all be-all, but I do want to let you know from now to mid-January, it is the Santa Claus rally, and equities tend to do very good. This is based on 20 years worth of information. In the past 5 years, you could see October, November, December, and January are all bullish. And if you look at the weekly, we're in a period here where we have a couple weeks in the row where historically, in this case, over the past 5 years, the bulls have won. I know at this point I'm starting to sound like a broken record, because it seems like at the start of every single week I'm telling you congrats, we hit new highs, but that's just what's been going on. This is a runaway bullish parade, which brings up the really golden question of how long can this last? The bubble and people searching for AI bubble has burst, what that means for stocks. Unless you've been sleeping under a rock, you probably know that this entire equities rip to the upside is fueled by this AI phenomena. And if you're watching this, it's probably safe to assume that you're interested in the market, trading, and investing, so it's pretty fair for you to be asking this question of how long can this possibly last? I fully understand that there's a lot of people with a lot of predictions of where it's going to go to, evaluations, timeframes, and if anything, I want to make it extremely simple. I have a very different take and mindset on how to handle this overall situation, so feel free to take this and copy it if you want, but also I understand if this is not for you, feel free to leave it at the door. As you can see on the screen, the S&P 500, the barometer for the overall equities market, has been non-stop ripping pretty much since May of this year. And at any point that it looked frothy, there was a little bit of a pullback and it just kept going. And I get it. Everyone and their grandma out there has a prediction of where it's going to end. And all of a sudden, everyone's confident in it. And when it doesn't come to fruition, they come up with all these excuses. My simple answer to all of you is don't have a prediction. As an active trader, a swing trader, if you are a person who gets in and out of the market, even on a multi-day, multi-week period, don't try to predict the highs, don't try to predict the lows. All you have to do is simply react. Use whatever your favorite trend following mechanism is. Are you following EMAs? Are you following the technical structure? As long as the trend is intact, keep your position. As soon as the trend breaks down, get out of your position. This idea of trying to predict the exact high, trying to understand the exact time, there are way too many counterexamples, in my opinion at least, of why that's a very poor way to approach the market. Don't try to be some mathematical genius clairvoyant person who predicts. If you do it, it's more of a parlor trip. You're not going to be able to do that repeatedly. Just react to the market. If the trend is still bullish, keep it. If it is not, time to lock in your gains and wait for the next trend to establish itself. In all reality, I think most people interacting with the market make it far too complicated. Basic trend following, that's it. Ask yourself, is the trend bullish or bearish? Do you have a bullish or bearish position? From there, if those align, great. You don't have to do anything. And that's honestly the hardest part of active trading, is sitting on your hands and doing nothing when nothing is appropriate to do. And I get it, that's more of the discipline side of things. But in terms of predicting the highs and lows, when's the bubble gonna pop versus not pop, I think it's honestly silly. And if anything, you're at more risk for leaving a ton of money on the table, or on the other side, way too long overstaying your welcome. If you want to keep yourself in that middle, that Goldilocks-esque situation, do a basic trend identification. Higher highs, higher lows, look at the RSI, look at the MACD, look at your favorite EMAs, whatever it is, basic trend identification. And as long as that is pointing in the same direction as your current position, you are good to go. And if those become inverted from each other, well, maybe it's time to actually manage it. Overall, the bulls are in control, and I'm going to remain bullish until obviously the data, the things that we could actually measure, tell me to switch my opinion, at least in the short term. That's what I have for you. As I said at the start of the video, whatever individual equities you want me to dive into throughout the week, leave them in a comment below, and I will do my best to include all of them in some specific breakdown videos. I hope you had a great weekend. I hope you're excited for the upcoming trading week. I hope you're ready to ideally make a bunch of attendees. I appreciate all the good vibes. I'll catch you in the next one.
Peace.